What's going on? What's going on? Facebook, Instagram, YouTube. It's your boy, Ryan Loede, aka The Machine, coming to you live from the LC Financial Group, Ohio office here in Cleveland, Ohio. Hope everyone is having an absolutely fantastic day. As I said, my name is Ryan Loede, The Machine, owner of LC Financial Group, where we're hiring, we're growing, and we're expanding in all 50 states. We help everyday Americans create a multiple six-figure residual income in the insurance industry by servicing and assisting Medicare beneficiaries. We're hiring, as I said, so if you want to learn more about what partnering with us here at LC Financial Group would look like, DM me, comment below, reach out to any of the partners here at LC Financial Group, or hey, send an email to our careers team. That's careers@teamlcfg.com. Careers@teamlcfg.com. So hey, we're going to be talking about money today. I haven't talked about money in a little while. We're going to be talking about some money increment tips and strategies for insurance agents and agency owners. I'm bringing you guys another insurance tip for insurance agents and agency owners. Hey, money, it's a sore topic. Many individuals do not like to talk about money, especially individuals who have quit on the money game. They do not want to talk about money. You bring up money to an individual that is just getting enough, or an individual that is just getting by, or an individual that is, like I said, quit on the money game. What are they going to do? They're going to try to get you to quit on the money game. They're going to try to suppress your motivation and your inspiration to get money, to create income, to create financial freedom, and to create indestructible wealth. Now, hey, I'm not saying that money is everything. However, money plays a factor into our life, because if we don't have money, we can't give back, we can't support, and we can't provide to other individuals. And don't get me wrong, money, it's only going to get you so far. It's only going to motivate you so much. It's only going to inspire you so much. That's why you got to have other purposes and other reasons for your existence here on the universe. For me, hey, personally, it's not all about money for me. While some of you guys watching this might think, oh, Ryan, you're always talking about money. You're always flashing your materialistic items. However, that's a small percentage of why I am actually living, why I'm working as much as I work. I have many other purposes, many other reasons, just as you guys should have as well. Like, hey, I want to give back to my community, a charity, my church, an organization, a foundation, my family, in extraordinary amounts. One of my goals and targets is to have $100 million of passive income every single month that comes in, and I provide $10 million a month to my church, charity, community, organization, foundation, and to my family. So let's jump right into it. We're talking about money. You need to get your money mindset right. You got to get the money right, because hey, if you don't get the money right, I'm telling you, you're not going to get the sales right, because money is going to help you get the sales right. Money is going to help you stick in the game with tough clients, and customers that are giving you a tough time, that are giving you emotional outbursts, that are rejecting you, that are bringing up challenges to you, that are continually bringing up objections and reactionary defense responses. When you have that money mindset, or you have these other purposes and reasons, and you have a bigger why as to why you're doing what you're doing, then you're going to stick in it longer. So having your money mindset is absolutely crucial, because hey, if you think $1 million is a lot and you get $1 million, what's going to happen? Are you just going to stop working, or are you going to continue on with sales? Are you going to continue on with building your organization, helping other individuals, right? So we're going to talk about money today. I know it's a sore topic. I know it's a sore subject that many individuals don't want to dive into. However, I want to help you get your money right. And this is why I'm continually bringing you guys insurance tips, strategies, and processes and systems that are going to help you get your insurance career, or maybe your insurance organization, to the next level, and to a level where, hey, you can step away from your business and you can go live your life. You can go do what you want, when you want, with who you want, in any amounts that you want, right? That's what we all should be striving for. And that's why money is important, because without money generation and money income and revenue and passive income that exceeds our earned income and passive income that exceeds our living expenses, without that coming in, then we can't step away from the business. We can't ultimately step away and still live a lifestyle and create a life and be able to give back and be able to support without money, right? So getting our money right is absolutely crucial. So I'm going to be talking about 5 money increment steps that you can use as an insurance agent and as an agency owner. 5 income increments. 5 income increments. Wow, I'm not even using green today. Or well, red I was using the other days, but we're using blue today. We're using blue. So we're talking about 5 income increments for insurance agents and agency owners. As I said earlier, you got to get your money mindset right in order to get the sales right. I heard this a lot from my mentor, Uncle G. He's like, man, if I were to teach individuals about something, it would have been money first. If he would have went back and he would have known what he knows now, he would have taught individuals about money first and then sales. And I explained that to you earlier because, hey, if you don't have your money mindset right, you're not going to stick in the game longer than you should. You're not going to deal with those difficult clients because you're going to be like, it's just another client. But when you know how much each client is worth and how much money you could be losing by not sticking in the game, by not becoming a sales professional, but by not becoming a great, then hey, you're not going to get the sales right. So you got to get the money right first. Number one, income increment. And the first goal and target, but before I even write it down, the first goal and target that you should have is this number one that I'm actually going to write down. It's the same target that I had when I first got into insurance, when I first started my career in the insurance industry. And it's a target that I recommend a lot of our partners here at LC Financial Group to do. And a lot of them are still striving to hit that target. And I hold them accountable. I hold them responsible to hitting this target. But the first target that you want to have is 100K stored. Now you're like, Ryan, that's nothing. I'm trying to become a multi-millionaire. I'm trying to have tens, if not 20s, if not 50, if not $100 million. You're talking about $100,000 stored away. That's nothing. I'm trying to become a billionaire. I'm trying to become a multi-billionaire, right? But that $100,000 stored is the number one increment and the number one target and goal that you should have as an insurance agent. Or maybe, hey, you're an insurance agency owner that hasn't stored $100,000 yet. This is the first target that you should have. And I've heard it talked about a lot, is that getting to that first 100K is ultimately the most difficult thing to do. But once you get to 100,000, then the rest is just duplication. Then the rest is just repeating those successful actions. Doing what you already did to get to that 100,000 to hit, the second increment, the third, the fourth, or the fifth increment. So getting to that first 100,000 is the most difficult one. However, once you hit that first 100,000, I'm telling you, all you got to do is keep duplicating it. All you got to do is keep repeating those successful actions. So what are you going to do when you're striving towards this first $100,000? Well, hey, your living is going to remain the same. Your living style, what you drive, the clothes you wear, the groceries you get, the amount of times you go out to eat at a restaurant, all that remains the same. Because what happens is, individuals that were making $30,000 a year and they start to make even more money, the first thing that usually typically changes is their living style, their living expenses, right? But that's the last thing that you want to change when you are trying to incrementally grow your income and grow your revenue. You want to keep $100,000. You want to keep that the main target, the main goal, $100,000 stored, and you want to remain completely broke. You want to stay broke. And I'm not just talking about staying broke. I'm talking about not spending your money on low value items or materialistic items or things that aren't going to create you income or create you revenue. Like for me personally, hey, when I first started in the insurance industry, man, all I did was create income, invest back into my business, and that's it. My living expenses stayed the same. I got the cheapest rent It was like maybe like $1,000 a month. I was driving like a very, very cheap car. I had like a Kia Optima that I bought off my sister for like a couple $1,000s. My groceries were very low. I hardly ate out, which now I eat out all the time because now I'm trading money for time. But at this moment, you're trading a lot of time for money. But that, you got to have that long-term goal and that long-term focus. Like, where am I really headed? Hey, I'm headed to not just trading time for money, but being able to trade money for time. I'm headed towards, having passive income that exceeds my earned income. Where are you really headed to in this career as an insurance agent or agency owner? You always got to stay focused on the long term. So that first increment is a 100K story. How are you going to get this 100K? Like I said, remaining flat with your basic living expenses. Do not increase your living expenses or your living style. Keep it the same. It remains the same. Because 82% of individuals in the United States, man, they're making less than $120,000 a year. 76% of Americans are living paycheck to paycheck. And a vast majority of Americans, they don't even have, $100 in their bank account for emergencies. They don't even have $1,000 or $5,000 or $10,000 stored away for emergencies, right? So this 100K, as I said, it's one of the toughest things. Getting that 100K stored, building the discipline to hold on to your money and not just put it back into the marketplace. Because as I said, it's one of the easiest things to create the income, to create the revenue, but actually building the discipline to actually hold on to that income is one of the toughest things for individuals to do. What happens is individuals create income. This is a typical scenario. Individuals create income and then they automatically put it back into the marketplace. They put their hard-earned time, effort, energy, and commitment towards creating that income, and then they just aimlessly spend it and they aimlessly put it back into the marketplace, whereas they should be storing it and holding on to that income. But it's one of the toughest things. So 100K stored, you got to be massively disciplined to do this. You got to have your income, your living expenses and your living style stay the same. It needs to remain the same. And you got to have that long-term focus. What is that long-term focus? Why are you even trying to get your money right? Right? You got to be asking yourself the right questions. You got to have that long-term focus. Like, where am I going to be in 5 years, 10 years, 15 years? What is my ideal life going to look like at age 60? You really got to map this out. You got to have those goals and targets. When you're moving towards that 100K, you got to have daily targets. You got to have weekly targets, monthly targets, and you got to have that yearly target as well. You should easily be able to store $100,000 within a year just by doing the math. I'm not gonna dive too deep into doing the math, maybe in another topic or another segment, but at this moment, we're just going over the 5 income increments as an insurance agent and agency owner, right? So number 1 is 100K stored. Number 2, as you guys can probably all guess, is 100K invested. Now, where are we investing this money? Well, I'll throw this in here. Yourself. What are the 3 best investments? Yourself, your business, or number 3, an investment vehicle or asset. So I'm gonna tell you a little bit about what I did. So I stored this $100,000. I did it probably a little less than a year. I was in final expense, running appointments, door knocking. I was out in Charlotte, North Carolina. Then I moved back to Ohio. I stored that $100,000 and I had a little bit of excess income. I still had excess income. I had maybe $110,000, maybe $115,000. I had enough income coming in so I can continue to reinvest back into my business, right? Because the last thing that you want to do is to get that 100K stored and just go ahead and invest it back in yourself, your business, or an investment vehicle or asset, and not have excess revenue and income continuing to come in so you can continue to invest into your business, right? So you got to check these off first. You got to check off yourself and your business before even thinking about investing into an investment vehicle or an asset. Because a lot of people, they like to jump from income to invest immediately. Like a lot of people are thinking like, man, where am I going to invest my money? I got $5,000, I got $10,000, I got $15,000, I got $50,000. Where can I invest my money? Like, no, that's the last thing that you want to do. What you want to do is focus on this first increment, and that's in storing $100,000. You need to build that discipline to actually store six figures in your bank account and not spend it, right? You need that storage account. You know, this is something that I've personally done, that I've learned from my mentor, Uncle G. A lot of other highly successful people have done it as well. It's like, hey, have that storage account. And you know, something else is that 40% rule. That 40% rule. Storing away 40% of the income that you actually make. Now, when your living style and your living expenses are so low, you should be able to store way more than 40%. But having that 40% rule keeps you disciplined, right? So the last thing that you want to do when you have that 100K stored is to just invest it back into an investment vehicle or asset. If you don't have the investments in yourself and the investment in your business continually going like clockwork, right? You should be able to continue to flow your income and your revenue back into yourself and back into your business before you invest in your investment vehicle or your asset that you want to invest in, like real estate, crypto, whatever it might be, right? Maybe back into a business, right? But when you have that 100K, for me, hey, I got that 100K stored. I'm like, great, yeah, I got 100K stored. I hit my first target. I felt so great because that 100K, as I said, it's one of the toughest things. So I got that 100K stored. And I'm like, oh, what's next? I need to get rid of this money. Because next thing I know, I have this 100K, money gets bored, money is like a jealous lover, money wants to be spent, and money is useless until it is used. So if I didn't invest that 100K, whether it was back in myself, back in my business, back into an investment vehicle or an asset, if I didn't spend that 100K, hey, I'm going to put it back into the marketplace into useless items, whether it's a car, maybe a new apartment, a new condo, maybe some new clothes, maybe some jewelry, whatever it might be. I would have just aimlessly spent that money. So I'm like, man, I got to get rid of this money. And I'm sure a lot of you that are watching this are in that, you know, same particular situation that I was in. I'm like, man, I got to get rid of this money. I don't want to hold on to this money. This money's going to get bored. I'm going to get bored. I'm going to spend the money. So I'm like, man, where do I invest this money? Well, good. I got myself, you know, I'm continually investing in the training, masterminds, boot camps, conferences, you know, masterminds, right? I'm already investing in myself. I'm checking that off. I'm already investing in my business. I'm continually investing in my lead flow that I get leads every single week, my resources, my marketing, so I can continue to, you know, create revenue, create income, and increase my revenue and income. So I'm like, all right, well, looks like it's time to invest into an investment vehicle or an asset. So I'm like, all right, well, now I'm going to just get rid of this 100K and I'm going to go broke. I'm going to stay broke and I'm going to stay hustling like an immigrant. That's something I love to do, is hustle like an immigrant. Hustle like I've got no money, right? And that's why a lot of highly successful individuals, especially the real estate individuals, they got no money. They're continually just investing their money back into real estate or back into an investment vehicle, their business or themselves, right? You got to be thinking like the wealthy think. You got to duplicate these traits and attributes of the wealthy so you can create wealth yourself. So I'm like, all right, I'm getting rid of this $100,000, right? I'm getting rid of it. I invested in the Cardone Capital. My first investment back in the Cardone Capital was, I believe, 2019, beginning of 2019. I'm like, man, I got to get rid of this money. I went broke. I stayed broke, and I stayed hustling like an immigrant. Hustle like an immigrant, right? You see these immigrants that come from out of the country and move into the United States, man, they're working harder. They're working more diligently. They're putting forth more commitment and energy and time towards creating income than most Americans do. Why? Because, man, they grew up with nothing. They grew up in poverty, and then they come to the United States and see all this opportunity, and then they're working like immigrants, right? And that's where I get the term hustle like an immigrant. So we got to hustle like an immigrant so we can create wealth, create financial freedom, and create indestructible wealth for ourselves and to leave a legacy behind. So 100K invested. I'm like, man, I got to get rid of this money. I got rid of that money. I invested in the Cardone Capital. That actually helped me create passive income. You know, I get 5 to 6% on that 100,000 every single year. Right now, that 100,000 is actually 300,000 that I have in Cardinal Capital, right? So $100,000 was invested. But first, before you invest that 100,000, you need to make sure yourself and your business is checked off before you invest in an investment vehicle or an investment asset. Because hey, those are the three best investments you can make: yourself, your business, an investment vehicle, or an investment asset. Number three, and I'm just sharing with you guys what I've done and what I've seen other highly successful individuals do. So number three, what is the third income increment, right? We're talking about 5 increments for insurance agents and agency owners, right? And hey, this could apply in any type of realm, any type of sales position or sales industry, right? Whether it's solar, whether it's real estate, whether it's crypto, whatever it might be, this can apply to you as well, not just insurance agents and agency owners. Number 3 is 100K stored / invested. 300K stored / invested. So now you're like, well, that's a big jump, 100K to 300K, but hey, it really isn't, because once you hit that first 100K, you start to realize, as I said earlier, all you got to do is continue to duplicate and continue to repeat those successful actions. You got to continue to economize. You got to continue to not change any of your operations. You got to continue to just do what you already did to get that 100K, and you just got to do it even more. And you're thinking like, all right, I'm just going to increase my targets, increase my goals, which will ultimately increase my actions. Then I'm going to get the 300,000K stored or invested. So first, 100K stored. Second, 100K invested. Third, 300K stored, 300 invested, right? And you just keep doing the same thing over and over and over and over again. It might seem monotonous. It might seem like, man, I just keep doing the same thing. But that's what the successful do. They just duplicate, they just repeat the successful actions, and they continue to do what they know works. And while they continue to do what they know works, then they implement maybe new strategies and new tactics in the mix of already doing what they know works. So you got 100K stored, you got 100K invested. The next increment, the next target, the next goal that you want to have is $300,000 stored or invested. So for me, it was like, all right, well, I've got 100K stored. I got 100K invested in the Cardinal Capital. Now I'm just going to continue to create income. I'm going to create revenue. You know, this was during my 2nd to 4th year in the insurance industry. For me personally, I just kept continuing to create income, continue to run final expense leads, continue to door knock, continue to run appointments. And then eventually I just kept having number 1 and number 2 checked off, which was investing in myself, investing back in my business, and I still had excess revenue coming in on top of what I was investing in myself and investing into my business. And then that's where the 40% rule comes in. The 40% rule is like, hey, for every 10,000 that I make, I'm going to put 4,000 into storage, into this sacred account, into this storage account that does not get touched for anything. My parents reach out to me, hey, I need some money. I'm broke. I ain't got no money, right? Your friend reaches out to you, hey man, like, you know, my paycheck's not till next week or next month, or man, I already ran through my paycheck. Can you loan me a couple dollars? I know you're successful. Can you loan me a couple dollars? Man, I am broke. And that's how you got to be operating. That's how you got to be moving. You got to stay broke. You got to go broke. And you got to continue, as I said, hustle like an immigrant. So we're at that $300,000 stored / invested. What do we do now? We got $300,000 stored and invested. You're going to go to number 4. Number 4, which is $1 million. $1 million. $1 million stored / invested. So now you're at a point where you're like, man, I'm striving for that 7 figures. That 7 figures stored or invested, right? You got $100,000 stored. 6 figures is the toughest thing, but getting to 7 figures, even easier. Getting to 8 figures, even easier. Getting to 9 figures, even easier, because you just got to continue to duplicate. You got to continue to build upon your systems, your processes, and your operations, and what you're doing as an insurance agent or as an insurance agency owner. And you know, I heard my good buddy Justin talk about this. Justin Von Megan, he was actually talking about this. Like, hey, if you want to make 7 figures in the insurance industry, you can't just personally produce. Well, you can, However, if you want to do it even quicker and even easier with less effort, you got to be an agency owner. You got to build an organization. You got to hire. You got to train people. You got to retain people, right? So if you want to get to this $1 million stored and invested, hey, become an agency owner, become an organization owner, and start to train, start to recruit individuals, and start to build a team, right? So number one, you're at 100K stored. Number two, 100K invested. Number three, 300K stored and invested. Number four, $1 million stored and invested. And then number five of the 5 income increments is, hey, number 5, and hey, maybe this could come before number 5. Maybe it already came number 4. Maybe it already came in your life in number 3. But hey, passive income that exceeds your earned income. This is one of the main goals and targets that you want to be striving for as an insurance agent and as an insurance or agency owner, is that your passive income exceeds your earned income. Now, we got to really know what passive income is. Passive income is something that does not involve your time, effort, energy, or commitment. You don't have to put your hands on it. It's just passively creating income. You got to know the difference between passive income and renewal income. Now with insurance, hey, with Medicare, it's all renewal income. It's not passive income because you got to continue to work on these clients. You got to continue to call these clients, stay in communication with these clients. You got to continue to send out mailers to the clients. You got to continue to touch on these clients and follow up with these clients. So that's what's called renewal income. But we're talking about actually passive income. Passive income is like, hey, for example, I throw $300,000 into Cardone Capital and that creates me $1,500 a month. Well, hey, that's passive income because I don't got to do anything. That money just hits my bank account. It's mailbox money and I don't got to work for it. I don't got to put any thought, energy, or effort or attention on that $300,000 that's invested. And it just creates me income every single month that flows in whether I'm working or not, right? So it's a big difference. And I just want to make that point is like there's a big difference between passive income and renewal income, right? Passive income, you don't got to do nothing. Renewal income, you still have to put some type of energy or effort or commitment or thought or attention on that thing to actually have it continuing to create renewal income. And that's what Medicare is. Medicare is hey, as I said earlier, we're helping individuals create a 6-figure renewal income here at LC Financial Group. So if you want to learn more, DM me, comment below, reach out to any of our partners. But number 5 income increments for insurance agents and agency owners. Number 5 is passive income that exceeds our earned income. And also, hey, if we want to dive even deeper, we want to be being able to trade money for time. Because these steps number 1 through 4, more than likely, most of the time, it's going to require you to trade time for money. We're continually trading time for money. Like right now, I'm trading my time to share this very valuable knowledge with you guys. It's not creating me any money, but hey, it creates me some type of ethical duty and obligation. It raises my self-esteem because I'm helping other individuals. But during steps 1 through 4, what's happening is you're trading your time for money. And we want to have that long-term goal. I'm going back to what I talked about in step number 1. You got to have those long-term targets and long-term goals. 5 years, 10 years, 15 years, 20 years. Where do you see yourself in the next 20 years? Where do you see yourself at age 60, right? You got to dive deep into it. But you got to see yourself being able to trade money for time. Being able to pay employees to do work that you were doing during step 1. Now you're able to pay employees to do those miscellaneous tasks and those responsibilities that you had to do during step 1, but now you can trade money for time, right? We want to have more money created because of our money than we have because of our time, right? If that makes sense, right? So we want to have passive income that exceeds our earned income. We want to have money that we can trade for time instead of trading time continually for money. So guys, 5 increments for insurance agents and agency owners. This is huge. got to get the money mindset right. You got to get your financial literacy right. A lot of individuals don't create financial freedom. They don't create success. They don't create indestructible wealth. They don't leave behind legacy wealth. It's because they're financially illiterate. You got to become financially literate. You got to study money. You got to study, the principles and the rules of the money game. Because once you know the principles and once you know the rules of the money game, you're going to dominate the money game. You got to get your money right. You got to get your money mindset right. Money is valuable. Money is something that you need to live. Money creates options and it creates choices. Money is not the end all. However, money is important. The way you talk about money, the way you think about money, and the way you view money is ultimately going to determine how much money comes in your life. How do the people around you talk about money? Right? Are they talking about money like it's a good thing, or are they talking about money like it's a bad thing? Right? How do you personally view money? How do you personally talk about money? Right? These are the questions you got to be asking yourself. What do you think is a lot of money? How much money do you need to become financially free? You got to be asking yourself these right questions. Right? These questions will determine how far ahead you get in life. You got to be continually reevaluating how you think, how you operate, and the way in which you take action in life. So 5 increments. Hey, number 1, 100K stored. Number 2, 100K invested. Number 3, 300K stored or invested. Number 4, that's 7 figures, $1 million stored or invested. Number 5, passive income that exceeds earned income. And now you're able to trade money for time. So you can do what you want, when you want, with who you want, in the amounts that you want. That's what we should be striving for, ultimately. Being able to give back, being able to support, being able to provide, and now being able to do whatever we want, when we want, without any restrictions. And that's what money is going to do for you. Hey, as it says in the Bible, the love of money is the root of all evil. Money is not the root of all evil. Money is a good thing. And you got to change your mindset and you change your viewpoint about how you view money. Because if you don't think money is good, money's not going to come into you. If you hold on to all your money so tightly and you don't get rid of it, you don't invest it, then hey, money's not going to flow back into you. Cash flow means cash going out and also cash coming in, right? You gotta learn about money, guys. I hope this found you well. Hope you found some value out of this. If you liked it, give me a like, give me a thumbs up, give me a love. Shoot me something in the comments. Hey, this was great. I found some value out of it. Hey, if you didn't like it, also let me know. I want to hear your feedback. I want to make sure that I'm providing valuable content to you guys on a day-to-day, week-to-week, month-to-month, year-to-year basis. Because hey, if this ain't helping you, I'm doing something wrong. Because hey, it's helping me and I want to help you as well. I want to help you get to your next level in the insurance industry as an insurance agent and agency owner. My name's Ryan Loede, aka The Machine, owner of LC Financial Group, where we're helping everyday Americans create a multiple six-figure renewal income. We're hiring, we're growing, we're expanding in all 50 states. If you want to learn more about what partnering with us here at LC Financial Group would look like, DM me, comment below, reach out to any of our partners here at LC Financial Group, or hey, send an email to our careers team, careers@teamlcfg.com, careers@teamlcfg.com. Today, folks, today's topic was 5 increments. Hope this found you well. Hope you found some value. Implement this in your life. Let me know if you have any questions on